Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about something different here. I'm not going to be talking about a certain deity for a ticker. I'm going to be more of addressing into what my portfolio is going to be like approaching the election. And what is there for me to anticipate. Now, there's a lot of videos out there that is telling you what to buy because of the elections, because either Trump or Biden are going to win. This is not going to be more of a political video. I really am just going to be approaching it from financials views, policy views, and what sectors are probably going to be beneficial. And it's not going to be just it's not going to really be my opinion much. I'm going to speculate a little, but it's going to be all research based. Let's jump right into it and try to keep an open mind. So first thing, this is the Nasdaq index itself. I had put this channel a while ago, and I believe it was around this time that I made a video a while back, and I said, well, I think if it stays above there for a couple of days, then we might see higher. But it does dip back. I mean, it's dangerous because it's dipping into the top channel. And then the third day, we see a massive crash down. It really went from breaking the channel from the top to breaking it down. Ever since then, what we get to see here is more of a breakthrough in terms of the trend. And right now, it's more of a little bit sloppy ever since the 12th of October. I mean, at the end of September, we start seeing massive jump over there. And then another one around the 9 and 12th of October. If I was to draw current channel, for instance, it would be a lot difficult to draw it than we did before. I mean, for the sake of the argument, let's go around here. And we get to see once again that trend is broken. And it continues to break that trend. Why is that? A lot of people are fearful here onto what's next to come, right? And we saw this by a red day today. The video is being recorded on the 26th. And so we saw a lot of that happening. And so we need to look into, well, why did the market jump? Well, the stimulus talk. I mean, here is a CNBC, more of just a trail of facts about the stimulus. And we're going all the way back to May 15, where the House announced the HEROES Act. We got the $1,200 stimulus check for that, with a maximum of $6,000 per family. And all through, we're going on to October, where Trump proposes standalone legislation and send 1,200 checks. For that, the House Democrats passed an updated stimulus bill. Then we got Nancy Pelosi and Mnuchin talking all day and all week long, and we're getting basically the stimulus coming soon. It's coming next week. Trust us, it's coming next week. And so the market has been rallying up on that. And I even remember one time Trump tweeted saying that, okay, yeah, no stimulus until after the elections, and then literally within 30 minutes after a market dips, it's like, yeah, there is a stimulus. Pelosi, get on it. And so we're really playing here with a lot of politics into the market, and that's where is the point where it comes in towards an election. That's very important. So I'm going to go quickly through three things: stimulus, industry policies, and how the market approaches elections, and a really interesting article from US Bank. So quickly, stimulus, October 19th, the negotiations at impasse. And so what happened is the White House has come up with an offer for a bigger stimulus bill per Trump's wishes. The package includes stimulus checks of $1,200 per adult and $1,000 per child. It includes $400 per week and enhanced federal unemployment insurance through the third week of January. So basically, the House Speaker Nancy Pelosi said the negotiations remains in pace until the White House agrees to address certain issues, namely COVID-19 testing and tracing treatment. October 21st, that is 5 days ago, $500 billion GOP Senate bills fails. The Senate Republican pulls forward a $500 billion to provide aids to Americans in certain areas. I believe this is an extension to the HEALS Act, which is different than the HEROES Act of the Democrats' House. So basically, it includes $300 enhanced weekly federal unemployment benefit, more payable protection program loans for small businesses, and liability protection for businesses. But the bill failed to get 60 votes needed to pass the chamber. Now, October 26th today, the White House backs targeted assistance. And the talks have certainly slowed down, but they're not ending, Larry Kudlow said, Director of National Economic Council. Additional aid is needed with regard to enhanced unemployment, PP small businesses loans, etc., etc., etc. Basically trying to move on that, while the Senate is expected to confirm Amy Coney, and basically, honestly, the Senate right now is not interested to give you a stimulus bill. The Senate wants to push through with Amy Barrett just in case, Biden wins and they don't have the White House. Even though they would still have the Senate, but probably not going to see anything before the election because of this. I mean, they have priority straight, right? A lot of these people are already rich, and they're not living paycheck to paycheck, so they don't really care much. So there's that. That's my opinion on it. Now comes in towards the elections, and a lot of people have been a little bit missing on this part. We might not actually know who the next president is on November 3rd. Now, November 3rd comes in on middle of the week. It's not tomorrow, Tuesday. It's going to be next week, Tuesday. And so what could happen is that we don't know the next US president, and you don't know how the markets are going to react on Wednesday when you don't know who the next president is. And kind of sitting there in kind of a void that you don't know, basically. And the market doesn't like uncertainty. Like, one thing that everyone agrees on is market doesn't like uncertainty. And so there's that, right? So that will be quite interesting to see. How will the market act? I'm not even sure. Like, I'm not going to hold any position going through the election because of that, or at least not more than 20%. Now, why we probably wouldn't be seeing, we won't know the winner on presidential election November 3rd? It's because absentee ballots are a big thing for this election, mainly due to COVID-19 and whatnot. And November 3rd is almost 1/3 of the United States merely require mail-in ballots to be postmarked rather than received by election day. And so what does that mean? Well, one of two things. You're gonna have you're gonna have ballots that are actually gonna be absentee ballots will keep flowing in after election day. So imagine about that, right? You can't declare a winner for all states. Basically, we can get a hint on it, but we can't really know. The next thing coming in is some states can't process ballots until election day, and that might cause a little bit of delays. I mean, that has been there for a while, so it's not very much of a interesting, or it's not something new for me. It's more about the absentee ballots that I'm thinking about, and I'm not talking about fraud and whatnot. I'm just talking about processing them, and by the time they receive them, that's all I'm talking about. Next thing is Trump may be reluctant to be accepting the initial results. I'm not sure how that is gonna really put an effect into the stock market. I mean, put your politics aside. I really don't care about this kind of politics. It's more about the uncertainty, in my opinion. Biden will also take his time before accepting any early results, so you're literally gonna be that kind of place where U.S. doesn't know who their next president is. This is an update on basically hour to hour almost for the Washington Post. You would probably need to fact check a lot of these stuff for yourself. That's part of the media itself. You need to make sure that you're actually getting the right information. And now comes towards how presidential elections affect after the stock market. And there was this really interesting paragraph I was reading. I mean, I read a lot of different websites. So Democrats or Republican, you may feel strongly about one party or the other when it comes to your politics, but when it comes to your portfolio, it doesn't matter which party wins. That I agree with. Republicans, Democrats, we're here to make sure, we make money. Conventional wisdom might suggest that Republicans who are supposedly more business friendly than Democrats would be beneficial for your stock holdings. In fact, looking back to 1900, Democrats have been slightly better for stocks, with the Dow up on average off nearly 9% annually when Democrats are in control, compared with nearly 6% per during Republican administrations. So I think the difference there is 3%, but normal variations in annual stock market returns dwarf the differences, says Russ, chief investment strategist at BlackRock. He concludes that a focus on which party of the White House is unwarranted, at least from an investing standpoint. And I kind of agree with this one here. I really don't think that you should be approaching the buying a stock based on who wins. If you want to buy Amazon, it doesn't really matter if a Democrat or a Republican wins. That's in my opinion. Well, I mean, you might have a different opinion that, based on X, Y, Z, but some sectors, like the oil sector, for instance, yeah, that might get affected. Some sectors like the coal mining, that is already affected either ways. So I've read reports about coal mining's not really going back in massive strength, so they're dead either ways, for instance. Anyway. Next thing is, here's how the stock market has performed before and during after presidential elections. And I'm going to go towards a little bit into the end here, but basically this is the picture that they had. It really shows in, if you notice, a little bit towards, well, let's not focus on here, for instance, Bush to Obama, that was the massive 2008 to 2009, so that's a little bit of an anomaly. Clinton, you see a little bit of a drop there, but that's also the 2K bubble there. So it's not really the best thing when you're looking into the past, but you get to see there's small dips here and there. It's just because of uncertainty. But when you're looking into this massive rally from Obama going on to Trump, you might start seeing a little bit of resistance coming in towards the next, just because of uncertainty. That's just my opinion on it. Now, managing your money during an election year. This is very important, and Forbes here nails it right on. You know, the media is not made for you to give you just, you know, the best news all the time. A lot of it is clickbait. You notice in the stock market, you know, you'd find them that like they're trying to basically get an explanation to what is happening, and you know they don't know much, so it's be like, oh, COVID-19, oh, vaccine hopes, COVID-19, stimulus hopes, nothing new, right? So the headlines are supposed to grab your attention. That's the point. For news media, president elections are like the Super Bowl. That's one only played every 4 years. Advertising money is flowing. It's a race to produce content and capture eyeballs. Take what you read with a grain of salt. Focus on what you can control. Stressing about what might happen under different permutations and combination of elections won't help anything. Instead, consider focusing your energy on aspects of your financial situation that you can control. And like, how diversified are you against the volatility in the market? That is essential. So leave your ego at the door and try to approach it in an unbiased opinion when it comes to money. I mean, you know, your money is money. We all want to increase our wealth, right? No one is sitting there, you're like, yeah, if a Democrat is in the house, I want to make sure I decrease my wealth. It doesn't work that way. We all love money. Zoom out a bit. Consider the first chart in this article. The stock market has gone up and down under all presidents, but over time the trajectory has been positive. Getting too hung up on what ifs over the next 4 years means losing sight off the big picture. That is as well a very important one. Next thing, and something really interesting, onto the usbank.com. It really has an article that says how presidential elections affect the stock market. And I really like this one here in terms of the chart. Now, honestly, the source of this was the US Bank Management Group. So it has a little bit of credibility, but still take it with a little bit of grain of salt. And it goes on basically in terms of the likelihood. Again, I'm not even sure how they came out with this, but you know, I'll just go along with it just for the sake of the argument. Just because I want to look what the implications are. I'm not going to really go towards the likelihood because that's not my business. It's not my place to say who's going to win. I'm Canadian, so I couldn't care less in terms of that. House Democrat, Senate Republican, White House Republican. You get to see basically if you're having more of a mix and match, whether one Democrat or one outcome being Democrat and two Republicans or vice versa. What we get to see is that they have a political gridlock. You know, very much like what we're seeing right now. And what we get to see, it's market friendly, even with the extremely unlikely. The only time that we get massive short-term volatility is with a full sweep. So there's that. Next thing is basically how the elections go on with each sector. So first off is healthcare. So Hanlon signals out the healthcare sector as one that often showcases increased volatility leading up to a presidential election. This year, the effect of healthcare companies will depend on election results. See, that's one of the things that I'm saying. Sectors really will run depending on who wins the specific sectors, though. If Democrats sweep, many anticipate a tougher stance on drug policies, a position that may put pressure on all pharmaceuticals industries, in addition to the policy forming the Vice President Joe Biden, that departs most dramatically from the status quo, is a public option for health insurance. A Biden win might signal future uncertainty or weakness in the healthcare sector. With that said, weakness in healthcare may be buying an opportunity given increased government version of policy. Technology. The fate of large technology appears marginally tied to a Biden win. Were Trump to win, however, regulatory action could intensify in the second term. The Trump administration Justice Department, led by Attorney General William Barr, is preparing to launch an antitrust action. Several large tech companies. Democrats may take similar action, although their approach would be less stringent. So it looks like they're moving on in the same direction with tech. Trade. That's why I was actually saying Amazon basically would have the same outcome, almost either ways. Trade. More than any other policy issues, Heinlein believes trade is one worth watching. He says trade policy will not only be affected by who occupies the White House, given the wide-range trade powers granted to the executive branch, but also whether the Senate remains Republican hands because Congress has the authority to approve new trade deals. Additionally, Biden and Trump have largely divergent approach to trade. The issue of engagement or confrontation with China. For example, Biden has struck much less confrontational tone, would likely seek a China trade practiced through international diplomacy and multinational organizations like the World Trade Organization, instead of Trump administration largely unilateral approach. Next thing is taxes. If Biden becomes president, he has promised not to raise taxes on the individuals earning less than $400,000 a year. Now, before you start, rallying up, do you actually make $400,000 a year? I mean, that's the dream, but I'm not sure how that's going to affect the market. I mean, already, like when we're looking into the stock market, our taxes here, what I understand from the IRS is they take a hefty cut from there. He does plan to increase taxes individuals earning more than the figure, but some of the specifics makes his tax plan less progressive than it initially appears. Higher income taxpayers will likely to regain the full state local taxes SALT deduction through the Biden plan. Now, when it comes to Trump's tax plan for the 27 tax law, the return for the full SALT deduction could offset substantial part of proposed tax increase for those living in relatively high taxes, such as New York, California, and Minnesota. So now comes the question: what do you do? Right? Do you go on and you buy, or do you short the market? Do you for health sectors? If Biden wins, do you short oil companies? I mean, I remember in the presidential debate he said he wants to slowly diversify from the oil sector to renewable. So what do you do? So this is a big question, and unfortunately, I don't have the answer. No one will have the answer for this, because if so, you'll find all like hedge funds are either shorting or going long, and you would find every single one of them has a different opinion, right? And you will find them not all on the same page, and that is the main factor. So in my opinion, if you still want to play on this, what I did was I cashed out 100%, and in fact I think I cashed out all the way back in around this region here in 24th of August, and all I did was literally just scalping, because I couldn't care less about what's going on next. It's an election year, and I felt, okay, we're in a massive bubble. When I'm saying a bubble, I mean the intrinsic value of a stock is what's driving the stock market, rather than the financials and how much they have in book. You can't deny that. So you find like a price over book price, or share price over book value is quite high in some stocks. And so my question comes in, for instance, is what should I do? So 10% or 20%, depending on how much money you're willing to lose. Basically, I'm not saying you're going to lose it. I'm saying that's the approach you need to approach it with. That would probably be feasible to play with. You can start looking into buying stocks, because I imagine there's going to be a panic. And I'm not going to buy until, let's say, November 5th or something. After we still don't know the election results, people are panicking a little because, some investors don't really realize that, for instance, because so that's a habit, right? You always know who the president is on November 3rd, or at least for the time I've lived on. There might be a little bit of panic. The market is going to dip a little. I'm not going to go buy, for instance, Amazon at this level, right? It's a little bit too dangerous. But if I want to buy something like, let's say, SPAC at $10, even though it's intrinsic value, or sorry, like it's $8 or something that dips like that, right? If I want to go on and buy Highland, like for instance, at $15 or something, I would start looking at stocks that, medium cap or small caps, just to kind of nibble on. For one reason, blue stocks and blue chips, these ones are really touched by, like, they're really investors, not traders. So once the market scare comes in, those ones are definitely going to drop, and we're talking about a market crash. Now, I really hope we don't see a market crash. I don't know which one is going to be who's going to be good for the market. If you would like to comment down below what you think, and please make sure it's civil. I know this is a little bit of politics involved, but please make it civil. We're here to make money. Drop into the comments below what you think and why you think it. So don't tell me, oh, if Trump is going to win, market's going to roar, and that's it. Sorry, soar, but like, try to explain why in terms of policies. Thank you very much for watching. Drop a like to this video to help this channel grow, subscribe, and leave notifications on. Have a wonderful day.